Hello, Warriors. ECB Day. Hello, Richard, Kareem. How's everyone doing today? Get my screen up here for you guys.
Good morning, Dale.
Good morning. What is ECB? That's good. What is ECB?
It's the English cricket board.
Okay, so far, is the market satisfied before we get to the other markets? What was their statement?
Well, they kept the rate still for now. We'll be doing 25 in July and then leaving the door open for September. If inflation keeps up, they could do a larger increment than the 25 BP. So they sort of
So
gave
pretty
the market
hawkish.
what it was looking for.
Yeah.
Very hawkish.
Yeah. So
25 basis points.
Well, I mean, for them.
Next month with inflation at 8.1%.
Yeah,
they should have gone a full percentage point.
Well, come on, guys. My question is,
I want Steve to replace Christine Lagarde.
He would be so much better.
We have such a great global depression.
They should
be able to buy everything, huh?
They should currently be doing 25 basis points, raising from 4.75 to 5%.
So hey guys, let's let K-Man finish here.
He's the liquidator. Steve's the liquidator, man.
Please let K-Man finish. Go ahead, K-Man.
Yeah. I'm done. I think they sort of gave the market what it was looking for, the possibility for the 50 BPs in September, and Euro tanked a little when they went for the 25 in July, and then what people may have hoped for is to close the APP straight away, but that's, I think, technically a little impossible, and to hike now, but that in their sequencing, that's not what we would have expected. So I think they sort of gave the market what it wanted, and now over to Lagarde to explain if she really wants to go 50 in September.
I mean, she's a lawyer. She's an expert on this, isn't she?
She's a lawyer, so she can kill any dream.
My question is this: with inflation, if inflation was 3-4% with a target at 2%, it kind of makes sense to say, well, let's wait and see if it stays here or it gets more elevated. It's at 8.1 or 8.2, whatever it is. I mean, that is shocking to me. They should be hiking today. They should be hiking 50 next month, etc., etc. But the ECB never ceases to disappoint with their dovishness. But look at the euro. I mean, the euro obviously dipped on the when they mentioned that they're going to be doing 25 only in July, but now it's back up. I think the market's a little bit short euro, and I still think the pain trade is to go higher.
Did anybody take advantage of that dip below 107? I did. I picked up some, and I'm looking to add post presser if we get if Christine Lagarde comes out, just talking hawkish. Did anybody else do it?
I didn't know, but
I'm sure that in the globe, on the planet, Blake, I'm sure there are a few others.
You
weren't the only one, Blake, that bought that dip today.
No, I just thought, it's one of those things that you got to take advantage of these opportunities, especially if you're a bull and you're a Euro bull and you think we're going to be breaking 108, which I think we are. So, dips like that, you got to be able to take advantage of. And, the next headline that came out really where it says, larger September hike possible if HICP outlook holds or worsens. That was the catalyst that drove it right back to 107.50. So
Greek Racer picked it up at 90.
That's a good price. That was, you must have been hit on a bid because it wasn't down there long.
Is your son trading now, Steve, the Greek Racer?
Currently, he's busy with throwing up and having a fever, so no.
Yeah.
So we got this move in the euro. So what should we expect? And we haven't heard from Ryan. Is Ryan?
He's going to be late today, he said.
Oh, Oh, okay. Well, let's fast forward 25 minutes from now, and we've got the ECB presser coming out or happening. What are you expecting from Christine Lagarde? Steve, I know Christine is and the ECB is way behind the curve, just like the Fed. But what do you think Lagarde's going to say today?
It's obvious from what we already got, right, that they just barely wanted to satisfy the minimum expectations, right? Now, that leaves the possibility open for the pressure to sound more hawkish than what we currently got in hand, right? But I don't think you should expect that much. I think she will have to leave open the possibility of accelerating the path of interest rate hikes, etc. But on the other hand, I don't expect her to, really be hawkish, right? It's more than obvious that if they wanted to do that, they had plenty of opportunity to do it with data being what they are for quite some time.
So you think she's gonna be more dovish and at this presser?
Listen, by definition, she will be dovish, right? Because when you are at 8.1% inflation, which is, by the way, a record for the European Union and for the Eurozone, right? We've never had higher inflation, ever. And rates are at zero. You're by definition dovish. I mean, even if she says I'm going to do 50 next meeting, you're still dovish.
Of
right?
course, and so is the Fed. I mean, we can make the same argument.
Yes, yes. No, it's even actually it's even worse for the ECB, right, because at least the Fed has done something already.
Well, that's because they tend to lead the charge anyway. But the problem that the ECB has, as you know, you live in Greece, right? You live in a country
that's completely bankrupt.
Yeah, that's going to be really, really affected by higher rates. Whereas, if I was talking to a German Greek, or German Steve Vulgaris, it'd be a little bit different, right? So, and that's the trick that's the tightrope that the ECB walks. The Fed can say, I'm going to make a decision for the whole United States because we have a fiscal union, but in the Eurozone, it's not so easy. So she does have a really tricky job.
Although it's a very short-sighted argument in the sense it's like focusing on the side effects of chemotherapy and telling a cancer patient, something, you probably shouldn't be taking chemo because it has horrific side effects. But you're missing the big picture, which is if you don't take it, you're going to die from cancer.
Right. Well, I mean, I'm in the camp that the ECB is way behind the curve, and she should be hawkish. But obviously, it's like, how does it affect everybody else? And plus, she's a freaking politician and a lawyer on top of that. So
yes,
with a criminal record, right?
With a criminal, gosh dang it, let's lock her ass up.
So the perfect lawyer. So the perfect lawyer.
Yeah, all right, the perfect lawyer. Hey, you married one. You better.
I know.
I hope your wife isn't listening right now.
No,
don't use chemo metaphors until you've been through
it. Okay, so hey, check it out. We got the euro dollar. Let me just technically just show everybody what's happening.
Chemo's worse.
Yeah, I know, Dale. I know. We got a sensitive subject. I know.
Money is money. But
we have a triangle being set up with the euro. You can look at it a couple of different ways. We're in a downtrend, very, very, very solid downtrend. We've had this, descending trend line locked in. We're below, the yearly, and I'll put it up a weekly chart. We're below the yearly breakdown point, but we're getting towards that breakdown point again. Everybody should already know that. But if you look more of an intraday or a swing,
where is it, like 110, Blake? 109?
Yeah, like 109-ish, but we've got a pennant setting up, so you can see some conflicting technicals, and just as most of you know, as those of you that are in the ForexAnalytix community, obviously you all know, I'm bullish the euro. I think that the ECB is going to play some catch up here, and the Fed's going to be especially if we get some.
I think, Blake, the
weaker
market is
inflation
positioned in a
data
way.
tomorrow. Hold on, really quick. We get some weaker inflation data tomorrow. Then you're going to see that continued, not divergence of central banks, convergence, where you see the ECB a little bit more hawkish, and the Fed is going to have to start leading a little bit more dovish. But that's my view, and I think that's why the euro's really set up in a more bullish technical pattern. Go ahead, Steve.
Yeah, that's exactly what I want to say. I agree with you. I think that the euro is positioned in a way that it will take anything Lagarde can throw at it as a positive sign to move higher.
Right. So here we go. And that's why you have to watch. I really believe a break above 108. You don't want to be short euros anymore, especially a daily close. We get a daily close above 108. I think that's the last place you're going to want to be, is on the short side of this.
Can I ask a fundamental question? Since I don't know
we only get answers from K-Man.
Yeah, okay, good. I was hoping you would answer. Is it possible that Lagarde is behind the curve because they see what's happening in the market and they really don't welcome a stronger euro, being that they're such an export-driven trading block?
That'd be one of the reasons why. So what do you say, K-Man? Especially you're watching Boons here, looking at Italian yields. I mean,
they're now trying to price in 75 BPs for September, by the way, in the market.
In total, or 75 just for in September?
In September.
Yeah, September.
Crazy.
No, I don't think we will listen to what she's saying, but I don't think the euro is anywhere a weapon for them just right now, to keep it weak because of exports. Don't forget they have to import a lot as well. Gas and oil and all of that is not denominated in euros most of the time. So I don't think they will use the euro as a weapon to keep it weak.
Especially given the fact that energy prices are at big extent responsible for some of the shorter term inflation, right? So think about it. I mean, a stronger euro would soften things having to do with inflation, and hence, as Cayman mentioned, in essence reduce the expedited nature of them having to be very aggressive. So I also don't think that they are really eager to push euro lower from where it is.
Yeah, that was my last point that I was going to mention today. So far, the only one really talking about the euro being counterproductive to combat inflation was Villeroy. The last presser, or the last couple of pressers, Lagarde was asked about the euro, and she says, yes, we see the euro. But she was very uninterested. It's the lowest probability ever, but it would be the biggest surprise that she said, yes, a low euro is not very good to combat inflation. So, I attach perhaps 0.5% probability that she might say something, but if she would, and we always have to be ready for the unexpected, if she would, then euro would absolutely fly, in my opinion.
Yep.
Oh boy, you just said like music to my ears. Euro is actually at its highs of the session right now. So we got to be watching the euro really, really carefully here. What other euro crosses look great? I mean, I'm just so you guys know, like the euro yen, we were looking at this, well, obviously this week. I'll tell you why. Had a pattern in play for the euro yen, and we closed that out yesterday as we were approaching the 161% extension. But you can see it stopped there yesterday. This is a 4-hour chart, so it stopped basically at the 161% extension, came off, but here we are, pressing higher again. So, like, do you? And this is going back to K-Man really quick, just because you're such a yen. I mean, you were in Japan, trading the yen desk, and you've been on, deal desk for the last 40 years, in currencies. What do you do with the yen here? I mean, was this pullback in the euro yen enough? I mean, are we going to get another leg higher?
Well, and that will be for the euro to decide. For right now, it's the market is buying it, right? Market is trying to buy euro crosses, euro CAD, euro max, euro. Every euro cross is higher. But the thing about the yen is that yesterday we mentioned that already. Let me just kill this squawk. That yesterday we were talking about that already, and this morning as well on the flow show that yesterday's yen move was. Likely more than just likely driven by momentum and model funds who have to buy when a currency or a pair goes one direction, the model funds, the momentum funds buy into that. But we were out of sync with the interest rate differentials right at that time. We also cannot forget that the 10-year JGB auction totally failed. So the market is, we were a little bit out of sync with all of that yesterday, and then we saw the subsequent correction this morning. Yen was bought versus everything. How far is it
Were you really talking about flow on the flow show?
We're talking about everything. Today was an absolute monster.
Just kidding. That's a little plug for you and Ryan. I know Ryan just stepped in here. I want to hear his views after you're done, but make sure you guys register for the flow show. It's in European hours. It's at 9:30 a.m. GMT. Make sure you guys attend. It's free, just like the F.A.C.E show here. So make sure you guys are attending every day, because K-Man that you're listening to right now and Ryan is also they host every day. So continue on, K-Man.
Yeah, so I think the yen could it will again depend on interest rates, but the yen could correct a little bit further, especially into the BOJ next week. I would expect that we can correct a little further in the dollar yen, but it all will depend on the BOJ. If they spring a surprise, then yeah, yen can strengthen. If they don't, with the ECB now leaving the door open to 50 BP hikes, then I think we are going to go to different levels in the yen, unfortunately. Yeah. Oh, well, unfortunately, no. For those who are long yen, unfortunately, but we risk of seeing really different levels.
All right. Well, thank you very much for the yen update, because it has just been nonstop bludgeoning for anybody who's been trying to get long yen. Ryan, what say you? Good to have you back. I know you were in the chat rooms updating the Flowonomics room, which is basically the macro chat room. You were in the trades rooms. I see you over there, updating what you've been trading. And then also you're in the general chat room. Now you're here. You're all over the place. So, kind of give us an update on what your thoughts are post ECB, statement, and what are you expecting out of Christine Lagarde here in the next 12 minutes? And tell me exactly what to buy and when to buy it. Thank you. Just kidding.
Too late for that. You got in a good one anyway, getting in at 98. On that, so
I did. Please click my mouse for me.
If you guys just I'll give you a little quick
details too.
Okay.
Here's a little quick update of like some positions that I've taken. This is my image of like what I bought. I'm long some euro, short some dollar max, short some rand. So that's that stuff I post in the trade room when I get into some trades. But go ahead, Ryan. How do you feel?
Yeah, I'm sure K-Man's done the most super nuts of it. Bit of a mess with the headlines dropping. Bloomberg missed the part about September they could go larger. Reuters nailed it. Took a while for the market to sort all that out. I mean, that's mainly what caused the dip. I did have a punt long at in the 30s just before the announcement, and I scrapped that at 11 when it dumped, but then I jumped back in again once the headlines sorted themselves out. Much as similar to you, Blake, I got in at 02, you in at 98, I think.
Yeah. Let me ask you this: what would provoke you? Because I want to add, I'm not full size position. I just picked up a little bit below 107, like you picked up some at 02. Yeah. What do you want to see to be adding to your euro longs from Christine Lagarde?
I think from here, I think it's difficult she's going to be super hawkish. They put 50 pips on the table with that September comment. Otherwise, it's going to be 25, 25, 25. Is she going to turn around and say, yeah, 50 pips on the table at every meeting? It's possible, but I think we could be set up for more disappointment from here. We can't break any of the big levels. We haven't even got close up to that 38.2 fib we've been watching for a while and up near 108. So, we've had a little dip. We've gone back to pretty much close enough to where we were before the announcement. On balance, I'd probably put it at maybe 30% chance that she's super hawkish and this move continues, and probably 70% that she's not, and she just plays the low volatility game. Sending out comments that that's where we're at. You'd have to wait and see for the rest of it. So I'm going to be a bit cautious. I've reduced my position down to half because of that. Stops just below entry. I'm just going to ride it and see what happens. But I think on balance, she's going to have to pull it out to be really hawkish and send this higher from here, I think.
Okay, and that's kind of echoing the same comments that Steve was saying earlier. I mean, right, Steve? It's going to be hard for her to be hawkish because by default she's dovish, just by the stance of the ECB currently.
Yes, but at the same time, don't forget, I agreed with you that the market is really looking for anything to rally at the moment, right?
Yeah.
I mean, I think the market is positioned in a way that is going to, cling on anything she gives them and try to rally on it. So, I don't think she'll have to make a big effort. Which won't make a big effort. I'm pretty sure about that, right? But it might not be needed for her to make a big effort to see a squeeze higher. That's the thing.
Yeah,
well,
the CPI number tomorrow could do it, don't you think?
Yeah,
Tomorrow,
exactly.
maybe that's it, right, Ryan?
Exactly. Yeah, but as we said in the flow show, also,
James, you owe me a Coke. 1, 2, 3, 4.
You've got to wait for this press conference because that's what the market does. It waits because if it's long now, if it's bought into this, it wants to make sure that there's nothing in the press conference that's going to derail that position for them, and then we might get a second win higher. But if we can't crack that 108 handle at the very least, I fear this ain't going higher just yet.
Okay, now I want to ask you guys about the euro sterling since I happen to have a couple of you guys from the UK here. You got the euro sterling back up at 86 pence. Everybody's bearish the sterling because they think that Boris Johnson's on his way out, and you're going to get this no confidence, or we got the no confidence vote, even though he's in, he just doesn't have the support. So, he's probably a few weeks, I guess, in your estimation, you guys' estimation, he's like couple weeks out from just kind of, bowing out. Do you play the euro sterling on the long side, or is it going to be Boris Johnson's out, no one's going to miss his hair, and people are going to love the sterling again? What do you guys say? I mean, do you buy the euro sterling above 86 pence, or are you more of a seller here? What do you guys think?
Markets definitely don't like uncertainty.
No, they never do.
Yeah.
But
so
if he's gone,
but if he's gone, there might be a period of uncertainty. A. B, I think technically speaking, 86 cents, huge level. We break above it, I think we see follow through.
All right. What do you guys say there? Since Steve only wishes he was in London and not in sunny Greece. What do you guys say, Ryan and Cayman?
From my point of view, this is something. We're in the middle of the ECB. That's the first and foremost. If he resigns, I think it may be a couple of months. I don't think it'll be a couple of weeks. Probably a couple of months. So just watch those headlines. I wouldn't necessarily be short the quid on that. It is just a leadership change, nothing to do with a government change, which obviously brings a bigger thing. But for here, I had some buy stops in at 86.20 just ahead of the ECB. I've pulled those now because we haven't really got close. I'm going manual on that at the moment. But again,
So you don't want to be triggered long on a breakout here. I mean, you don't want to have like, some.
I do, and I don't. I'm taking the guard into account. If she can't break it, it's down to her. If she can't break 86 here, I don't want to go long on a break trade.
That makes sense.
That's my view. Sort of thing.
Okay, K-Man, you have any opinions here?
Yeah, I'm keeping my 86 quarter break stop in place right now. I'm a little long, been trading it around, so yeah, I'm a little long and I'm waiting. But indeed, I mean, Ryan made a good point. Perhaps it's not really right to have those the immediate break of 86 orders in when Lagarde talks, because she can kill a lot of dreams. But it's not only Boris Johnson. The UK has other issues, and I really think it's going to weigh on sterling in some form. Euro
Because
sterling.
I technically, I really would love to be long the euro sterling. I mean, there's nothing more than I love than having a false breakdown like you see here, from earlier this year. False breakdowns more times than not lead to breakouts, right? So you get you're going to get an eventual breakout. It feels, but today, what you guys are basically saying is today might not be the day, right?
Well, I guess it comes down to the psychology of it. I'm long from average of 83.50. I've no need to rush into anything. I've got chips on the table, sort of thing. Whereas you're not in the game. You're looking where can you get in the game. So there's a slightly different psychology there to the trading view.
So let's. I'm sorry, I hate to shift gears on you guys, but let's take a look at the dollar index. You guys know it's driven predominantly by the euro. We have a 38% retracement that's holding, and I'm going to give you guys just a quick, for those of you that are not, you're more new to the community, or maybe this is the first time you've heard this. I just want you guys to be really clear on this. When you're looking at a move, this is what a lot of people would call this like an impulsive move. This is what you would see as a flag pattern, right? When you have fib levels, you got 38% retracement, 50% retracement, 618, 78, blah blah blah. Whenever you're in a move, and by the way, this is a false breakout on the dollar index on a monthly and weekly basis, yada yada yada. Okay. When you see a move that is only a 38% retracement, that tends to lead to a continuation move or a flag pattern or AB equals CD, whatever you want to call it. It ends up being a continuation lower, right? In this case, when you get past a 38% retracement, the risk starts becoming, if you get to a 50% retracement, or maybe let's say a 618 that's right here, then you start to get into what might end up being a consolidation. But when it's only a 38% retracement, that's what happens. You get what we call a shallow bounce. That means a lack of interest here, and that means the risk is a continuation. So the euro breaking out above highs right now is no mystery to most of us, and that's something that if you're trading the dollar, or trading the euro, and you're like, okay, well, the euro is breaking higher, you've got to look at the dollar index and know that the sterling's going to be dragged around by its pigtails, if you will, by the euro. Same with the Aussie, same with the Kiwi, the Canadian, the Norway, the crown, whatever you're trading. Just know that the dollar index, the move in the dollar index is at risk of a continuation move down to the 99, maybe 98 level in the coming weeks ahead. So if the dollar breaks down, if the euro breaks out, the euro breaks above 108, it is going to have a knock-on effect in other currencies. Now, really quick, if you're following along with what's happening today, we have coming out, we have initial jobless claims. It's not really a number that I'm looking at. I don't know about you guys if we care a whole lot. I care about the inflation data tomorrow. That's all that really matters. And then obviously the ECB presser that's happening, here as we wrap up and Dale has his interview. But any final thoughts, Stellius? We didn't hear a whole lot from you over the last 10 minutes. So any final thoughts as we go into the?
You said all that needs to be said. I still think that the pain trade is for the euro to rally, and when I think about that, I think I say to myself, if I'm short the euro, what do I want to happen? What do I want to see? Well, we want to see Lagarde being more dovish than what we have seen from the announcement, right, on the presser, and I find that difficult to see how she's going to walk back, what they've told us. So the 25 in July and possibility of 50 or more after that. So if I was short the euro, I'll be quite worried here. And I have to reiterate, I really like being long the euro versus the pound and the dollar, those two.
All right, and I know you guys have been talking about this all of 2022, like. The trade of the year is going to be when you see the Fed hawkishness peak and the ECB, dovishness bottom out, and that's kind
Blake,
of what
we
we're
got
getting right now.
Initial jobless claims, by the way.
Oh, thank you very much.
A little bit 10% higher than expected. Do I believe it's going to move the market? Not really.
Okay, so
just keep an eye, because the 4-week average it looks like it's bottomed, so it could be start creeping up again.
I agree with that.
It's interesting. It's going to be. I know we've said this a lot over the last 30. Well, I'd say like the last month. Data is going to start to matter. Economic data is going to matter. We've been laser focused on inflation, but now we're going to start watching jobs, and the jobs data in the U.S. is going to matter moving forward. So I want to say thank you guys for the ForexAnalytix team for being here. Dale, thanks for corralling us every day and keeping us all in line. And I know you haven't. Who do you have as an interview today?
Yeah, Tim Valens is with us today, and specializes in VIX. So I have some.
Oh, cool. All right.
Tim's cool.
Yeah. So it'll be good to have Tim here, and I want to say if you guys haven't visited the Trader Funding Program, it's our sponsor here. Make sure you check it out if you want to learn how to trade our money. We have people that access live trading accounts, larger trading accounts. After passing assessments every week now. So we've been doing this for the last few months. If you want a 2-minute explainer video, just go to the very bottom of traderfundingprogram.com and you can see a little 2-minute explainer video of what that is. And also make sure you visit our webinar sponsors, 8cap, and then also Forest Park FX. If you want to learn how to get ForexAnalytix for free for a period of time, make sure you visit 8cap right down here and you can learn how to do that. Stelios, Steve, Ryan, K-Man, the rest of the team, ForexAnalytix team, thank you so much. Dale, have a great interview.
Cheers, guys.
Thank you, team.
Thank you, guys.
See you, Ryan, Stell, Steve, and of course, K-Man. God, I mean, the content in the first half hour is pretty strong. I'm learning every day. I don't know about you guys, and it's time to learn a little bit about the VIX. Tim, welcome back to F.A.C.E.
How you doing, mate? Yeah, you're not going to learn much about the VIX from me.
Well, you're a VIXologist, so you're not a proctologist, so I figured I'd learn about the VIX.
Only in my spare time. No, I don't trade the VIX at all. Don't really just look at the VIX as a kind of parallel to what we're expecting volatility to be in the S&P 500. That's really the extent of my VIX knowledge. No, we're much more focused on the macro side of things. What's going on in the macro world.
All right, Tim, you want to share your screen?
Yeah, let's go for it.
Go to share screen. There you go. You could do it now.
Okay, there we go.
I do have the handle right, Follow Tim, right?
Yeah, but that's from my surname.
Okay.
Nothing to do.
Right.
Well, it is kind of to do with volatility, but nothing to do with trading volatility. More my temper.
Okay, because I was ready to ask the question on the decline that we saw here. The VIX really never performed. There'd be days when the S&P would be down 40, 50 handles, and the VIX was barely positive at times. So did you notice that?
But you've got to look at the VIX in the sense. I look at the VIX as a barometer of expectations. So when you've got the VIX up where it was at 25, we're expecting sort of 1.5-2% moves every day, kind of to allow for a bit of variance around that. And, and if we're getting that, then there's no reason for the VIX to continue trading higher, because it's sort of meeting expectations more or less.
Great
so that's the way that I use it. It is really just it is what it says. It's a measure of volatility, and expected volatility.
Okay.
So yeah, I don't really go beyond that. With the
Okay.
VIX, that's what it is. It's just something, and I mean, some of the guys that trade the VIX as well. I mean, you must have spoken to some of them. Jesus, I mean, they're so intelligent. Real give you inferiority complex.
They're rocket scientists.
Yeah, completely.
Yeah. So I see a little triangle you have up here on the S&P.
Yeah, that's it. I mean, there's a few things that I've kind of prepared here today that I wanted to chat about, because obviously, as I say, we're looking at things more from a macro perspective and trying to zoom out and get out, outside of all the day-to-day noise, and really sort of get a handle on what's going on, where those larger trends might come in. And I mean, at the moment, obviously today with the ECB meeting, it's all about the euro and these spreads that I've got up here on the screen. Right now, okay, so what we've got here, all right, is I've just brought in a couple of spreads, all right, between Italy and Germany, all right, because obviously aside from the, the ECB are hiking, that should mean that the euro should go up because they should close this gap that we've got over here on the right, which is the difference between the US 2-year yield and the German 2-year yield, which we use as a bit of a proxy, for the interest rate differential trade there. And to me, I'll be honest, technically, it does look like the euro wants to break out to the upside. Yeah. But from a fundamental perspective, I'm still not convinced by what else is going on with the eurozone as a whole. I think what they're doing at the moment is they're pushing. They've got to do something, obviously, because of the inflation and the level. They have to respond. It would be sort of irresponsible of them not to. But where we're going to run into problems, I think, is maybe 3 months down the line, perhaps towards the end of the year, where the markets, I think, really going to start looking at these higher rates and start assigning this premium back into Italy and the other sort of peripheral countries. And the ECB is going to have to be credible about how they're going to manage this spread that we call it between, say, well, look here, I've got Italy and Germany.
Could I throw Greece in there too?
Yeah, throw Greece in there, definitely. Italy and Germany I'm using because that sort of is the main benchmark that everyone looks at. Like, when everyone, it's the one when everyone notices, when this one really blows out. And, just since the meeting here, if I just dial down a little bit to the hour.
So the technicians are supportive of the Euro USD, and the fundamentals, you're not convinced about it yet.
No, not convinced.
So what you go with as a trader, you may have a bearish backdrop fundamentally, but the charts are saying there's going to be a rally. Do you go with the rally, or because of the fundamentals, you let the rally go and look for shorting opportunities?
Yeah, you have to let the rally go. You have to. We're seeing it across all kinds of markets. Fundamentals, they matter at different times, but they don't matter all the time.
Right.
There's sort of you tend to get these turning points, where all of a sudden everyone's worried about something, even though it's largely been talked about for months. Even the ECB statement today, they've already mentioned the fragmentation, the potential fragmentation risk. And what they mean by that fragmentation is obviously the spread between, say, Italy, which has got this massive debt load, and really the higher interest rates go, the more the risk of default is for Italy. It's essentially, if you break it down to the simplest terms. So the spread between the kind of, if you want to put it into sort of bond terms, like corporate world, you've kind of got this prime bond, which is the German Bund, and then you've got the junk bond, which is Italy. And if the spread between the two of those becomes too much, then you get into the kind of sovereign debt crisis world, and what's going to happen, and the uncertainty will generally see people fleeing the euro markets as a whole, which obviously we saw, was it 10 years ago now, wasn't it, since Draghi had his moment?
Yeah, are you looking for 2.0 on this?
Potentially. I think what we need to see now is what actually happens next. I don't think that the ECB can keep raising interest rates, to anything like the level that they're talking about today with this kind of sustained increase, unless they can put together some kind of very credible tool, which I think is going to be very controversial in Europe, because as we know, it's already quite a political project, whereby essentially they're centralizing the debt, into these euro bonds, which no one really wants, and they kind of approved a few of them in the pandemic under emergency, but that's about it. So they've got the reinvestments that they can play with, where they can basically reinvest they can reinvest more, say, Italian bonds, as they come due, and less of the German bonds, and try and manage the spread that way. But that's not really a sort of permanent solution. So, I mean, you know, I'll be fascinated. They say they're working on something. There's been a couple of leaks that have sort of come out about them working on a tool, but there's no real details about it yet at all. So that's something that we're really watching for the euro. And I think, you know, as I say, you've got to go with the price, but you've also got to be aware that, you know, it's not necessarily going to be a kind of forever trade. You know, I mean, but they never are they? But it's not going to be a kind of medium-term trade. I mean, I don't think the euro can really sustainably break out from here, because I think we're going to see the US go above neutral. I think we've done. Actually, I'll tell you what. Let me bring up the dollar yen chart over here. All right. Now, obviously, the move in dollar yen has been just exponential, just absolutely off the scale. Meteoric, yes. But again, unless the Bank of Japan are really prepared to do something, or something else breaks somewhere in the world, then I don't see any reason why we don't just follow this pattern again. You know, we had this spike higher here where we really just pushed on. We kind of pulled back. I mean, that's pretty much a textbook flag. We've broken higher again. You know, obviously, the speed of this is what the Bank of Japan and that Ministry of Finance are really pushing back against. You know, they're saying they don't want the yen to devalue too fast, but they're still very much in the mode of a weak yen is better than a strong yen as a general kind of economical tool. I mean, and this is something that I never thought you'd sort of even have anyone talking about is why would the Bank of Japan ever raise interest rates? We're in this kind of negative or low interest rate world forever. And yet here we are doing this. And imagine now that inflation doesn't come down, as I suspect is going to be the case. It's not going to come down. It's going to come down. Sorry, it's going to come down, but not as fast as the Fed and other central banks would be comfortable with.
Well, the general uptrend has some peaks, and you know, where it pulled back a little, then go to higher highs. I think that's what happened in the 70s. There were a few times it looked like maybe they had broken the back of it, but it was just temporary, and then you had another surge. So you're looking for something like that. I didn't think you were around in the 70s. Were you?
No, I wasn't. I definitely wasn't around in the 70s, mate. No, it was a glint in my parents' eye.
Okay.
But yeah, I mean, this is the thing now. So I think you're going to see potentially, especially with the Bank of Japan, especially with the yen and the euro, basically these kind of these low interest rate currencies. I think you're going to see them struggle again. You know, they're now there's a pause now where they're going to try and catch up. You know, well, the euro is going to try and catch up. The Bank of Japan are just in their own sort of world. The euro is going to try and catch up, and we're probably going to see, you know, maybe get above neutral in Q3, or get above zero. Apologies. You know, in September, whether or not that's 25 or 50 is still up for debate. But then beyond that, I think the Fed might have to press the accelerator again, and that's really where we're going to open up the next leg of the trade. So, you know, we'll see.
Okay, so short term, so it's a little bull market pullback in the dollar, and then a resumption of the uptrend.
Yeah, that's really what I think. Mainly because of energy as well. You know, everywhere you look, you know, and I was talking today, I did one about just a little bit about the sort of layers of supply and demand in the gas market. Because yesterday, we had this year. Okay, so this is the thing. So obviously, just trying to explain it with a bit of a meme. You know, the global energy crisis, you had the explosion at the Texas gas facility, and get US prices fall 7.7%, and everyone goes, huh, what's happened there? You know, obviously it's because you've got this kind of, you know, it's a global market, but obviously it's sectioned off. So obviously what that means is more gas stays in the US, and that kind of that shortage of supply is transferred then to Europe, which is why we got this move in the Dutch, you know, the Dutch benchmark today over in European gas markets. And I think there's a lot of people that got very confused by this kind of thing, you know, and we're seeing this, you know, the global undersupply, you know, prices should be going up. But if you notice, you know, European storage is already filling up. So this will be fine for a while. But if anything else happens with Russia, or if we have a particularly cold winter, or any of those things come to pass in the winter, then obviously energy prices are just going to keep going up again. And what does that mean? You know, and that energy is everything. Energy filters through absolutely everything in the economy.
So maybe we may have a little respite here in the summer and fall, and
Yeah.
then it becomes a weather market, demand increase for heating.
Quite possibly, and obviously there's only so much storage as well.
What do you think could happen in Russia? What else could happen in Russia to
Well, I
be
mean,
more
it's,
bullish oil?
to be more bullish oil, I mean, it just essentially all that really needs to happen is for Russia's output to keep sort of decreasing. It's already decreasing now,
It
and
is,
because of
yes.
the inefficiencies in, because obviously before there this lovely efficient pipeline, straight into Europe and everywhere else. Europe got their cheap gas. Russia managed to get out as much as possible. Well, now that's not going to happen as much. Gradually it's going to decrease. Then obviously they've got to reorganize all of that supply chain, which makes it less efficient, which means they're not going to be able to produce as much because there's only so many tankers in the world that can get it around the world.
Could we see 80, Tim? Could we see 80 if things come together before we see 150, 200?
I think 80 might be a stretch too far, to be honest. I think, unless you, the thing is, anything can happen in your market at the moment because of the way liquidity is and everything else. But I don't see it happening unless we really get into sort of recession slowdown fears. And I have got my concerns about China there. I really have. Everyone's very much on the China reopening trade at the moment, and they're talking now.
And there's a story today, copper's down because they fear that they're going to shut down again. And I actually interviewed a guy who said they can't open up again.
He says they can't open up again. Why?
Yeah.
Why can't? What's the reason? Why can't they?
I don't know. Maybe their COVID policy. Maybe they can't stop this, and they do for a little while, reopen, and it's not a full reopening, and they have to lock down again.
Yeah, I don't think that's going to go. I don't think that's going to happen. I think that as much again as we look at China as this kind of big, powerful, all-powerful communist state that people bend to their will. We also saw a lot of social unrest before. Unemployment's already at very high levels according to the official stats over there. So I think they're going to have to give it up and really try and find new. Basically like we did in the West. We started out with these really severe lockdowns, and then we kind of, we loosened it a bit, and we went back a little bit. Then we loosened it some more, went back again. I think that China's going to follow a similar path. It might not take as much time, perhaps, because they've hopefully have learned some of the lessons from our kind of our experience with it. But yeah, I don't see them locking down as severely as they did, over the last few months.
Okay.
But yeah, cool.
No, you've wanted to talk about your S&P chart and the triangle, and probably talk about what you think is going to happen here.
To be honest, actually, the S&P chart is more a cautionary tale, all right, for me, that I don't know what's going to happen here. All right, I don't have I have maybe a 55% bias, okay, that will push higher, just because I think that's the one that makes least sense at the moment. So why shouldn't it happen?
Okay.
Yeah, but really, you look where we are on the chart. We're in no man's land, absolutely no man's land. We've got this. We're consolidating here because we haven't got the next impulse. We need a catalyst, which maybe the CPI print tomorrow might be, but it might also just extend uncertainty. We'll see. But it seems like everyone wants to play the peak Fed trade. That's my feel for the market at the moment.
But no, everyone's hoping for a good number. No one's talking about a bad number.
Yeah.
Maybe we get a bad number and they can't crush the S&Ps. That would be a pretty good tell, wouldn't it?
Definitely.
Because the bonds are on the verge. I don't know. I look at TLT, the 20-year proxy, and it sure looks like we should have one more low coming in that. So
yeah, I think so.
This seems to be the acid test for a lot of different markets, how they could handle this next push up in yields on the long end. Is there anything that you have high conviction about in this climate, or you feel kind of
no, that's exactly not really.
Okay.
Just again, it's sort of timing wise. There's certain at the moment there's not much to have high conviction about because we're all watching the CPI number. This is something that again I talked about today, and I did this little graphic in today's note. Just a silly little thing, but just to try and illustrate what I think you should be doing most of the time, but especially in this environment, is that you're looking at all of these things which are all competing for your attention. What people are thinking, what's the drivers, are we going to go higher, are we going to go lower, and all of those. And then I think you just have to estimate the benefit that's going to be delivered by each action and select the most effective one. So which trades do I want to do in this environment? Well, there's not many. There's really not many. It depends on the catalyst, depends what happens. But generally, you've got to be really selective, especially in this environment. And that's, it pays you well in most environments, but sometimes you can get away with it. This isn't that time. So here trying to call the direction of the S&P 500 sort of for the next leg, I think is a fool's game at the moment because it depends on what happens. Simple as that. So as you say, if a high CPI number comes in and we can't go down, what goes down must go up. And I think then that we can possibly get a bit more of that kind of, that was close, we've got away with it. If we can get up towards this 4,300, 4,300 up here, then maybe we can get that kind of a bit more bullishness. And then obviously then we can perhaps see a next leg down, which I do think we're going to see because I think higher interest rates are a feature of the next year or so. As I say, unless there's a recession. And if you look at the data at the moment, again, we'll see what happens in the winter, but certainly through the summertime, people are desperate to go on holiday. They're booking their holidays. They're still spending. They're putting money on their credit cards. They're not necessarily buying all the stuff that the stuff that all the transitory guys were talking about with Target and Walmart. They were saying, it will be the bullwhip effect. It will be the bullwhip effect. They'll buy too much. It will be the bullwhip effect. And it was, but it just took so much longer to materialize than I think people realized it would. Now we've got, the goods side of things, that's going to help with inflation on one side, but it's now extending again. You look at travel. Now travel is a big part of the service sector that we're going to see through the summer. Obviously travel, one of the key components of it is fuel. And obviously that's why fuel prices are going higher. There's no real spare refinery capacity to kind of really help out with that.
Right.
So where does that relief come from in terms of inflation?
Not from food unless we get rain.
yeah, very true. Very true.
Yeah.
It's a bleak picture, but I think partly because a lot of us, a lot of people have seen it coming sort of a way off. I think it's already some of that was already in the price when we fell to 3,800. Now we're kind of in the range where everything is known for now, but now I think you're right. There's two kind of courses of action here. Either the Fed has to get into positive interest rates, so above neutral, above, even maybe above the rate of inflation. Jesus, that would be something. But, at some point they have to do it. There was something that we covered. Let's have a look here. So this was February, right? Where, do you know Zoltan Pozsar, the Credit Suisse guy?
No, I don't. No, go ahead.
Okay, so he's a guy that's he's well into the sort of the market plumbing and all of this sort of stuff. But then he kind of started coming out with a few things about what might need to happen. Okay, and he was talking about, you went full off piste as we've written here and called for a Volcker moment. Which again, he was really what started the kind of Volcker thing coverage in the media and everything else. Okay. But basically, what we're seeing happening already, mortgage rates going up, interest rates going up, is sort of starting to bring down the rate of, the kind of the rate of change in house prices, in stocks, all of those things. And we're seeing that in the housing market, mortgage rates are up, it's slowing right down. So all of that side of things is happening. But what we've kind of got to do now is work through all of these reserves that people have built up, in terms of their wages, what they're actually living on, their savings.
You mean their balance sheet, consumer's balance sheet?
Yeah, the consumer balance sheet, and also their capacity to take on more credit. Because I think a lot of people, if you think about, what we've seen over the last couple of years, a lot of people got good pay rises, and they're feeling wealthier, and in a lot of cases they're able to pay down debt as well. So they're probably not at the edge of what they can service in debt right now. It's obviously going to come later if they try and remortgage their house or anything else, which who's going to do that right now unless they really have to, but the interest rates having moved as fast as they have. But for now, they're pretty comfortable. A lot of people manage to lock in mortgages at lower rates.
Oh yeah, they couldn't find a place to rent cheaper. They sold. Yeah.
Well, but the rents have gone up as well. But it's something.
They've gone up a lot here in the US.
Yeah, that's it. So as long as you're not renting, and again, as long as your wages are moved up, then the
only way they're going to sell is if they don't have a job and they don't have any credit left.
Pretty much. And this is where the interest rate story comes from, because I think the Fed really want to, to clamp down on demand and sort of crush the demand, but they're going to have to try harder, unfortunately. It's it takes time, and unfortunately, they haven't got the luxury of that time right now.
There's too much leverage in the system. Let me tell you something.
Yep, that's it.
It's like from a moment of debate with Mondale. I traded under the Paul Volcker regime.
Okay.
And Jay Powell is no Paul Volcker.
I'd agree with that. From what I've seen. So obviously, I wasn't around there, but yeah, he was a lot more aggressive, and he just
You know what, Tim? You know what's the last market to break when rates were 18, 19%? They'd taken apart, broken everything. What do you think the last market to break was?
Oh, I don't know. Go on, tell me.
All right, corn.
Corn. Wow.
Yeah, because they can't print it.
Yeah, absolutely not.
Okay,
absolutely
so
not.
Anyway, so you've given a lot of thought to. So this is a period then where if you're coaching or mentoring people, you're talking about patience.
Absolutely.
Right. And I have to self-talk, right? And I have this tweet that great surfers, like great traders, don't try and catch every wave.
Correct.
That they too have to be patient and wait for a good setup.
Yeah, absolutely, bang on. I like that a lot.
So how do you do that though? Do you want to step away? Practically, how do you do that? You have to step away. To just sit there, it's almost like it's more. There's nothing to do. Why am I sitting here? I ask myself.
Yeah, I mean, I think there's a really kind of just basic analogy that you can look at this as, right? The way that I kind of think of the market is it's an advertising mechanism. Maybe even you remember those? I think they're still around. Those shopping channels. Remember those shopping channels?
Yeah.
Like QVC and all of that.
Yeah.
I think they're roughly still about. Not for much longer, but they're there and they're advertising all the time and all this stuff, and they're throwing at you. And if you're watching it all the time, then you're tempted to buy whatever it is they're selling. And the same thing. Any of those, anything like that. If you go to like a sales fair or whatever, you're constantly being sold to, and the market is doing that all the time. Whereas if you go shopping with a shopping list, then you buy the things only that are on the shopping list, and then you come away. Generally, you're going to do a lot better than if you just turn up with no idea and you just buy everything that looks nice or anything that's shiny or something that's got.
Are you married?
Special deal or anything.
Are you married, Tim?
I am.
And does do you give your wife a shopping list?
For the food, yes.
You try anyway, right? Okay.
Yeah, exactly. But it works for trading. The analogy kind of works for trading. It's you've got to prepare in advance and know what you're looking for. And
all right.
That's what I'm going to get today.
Yeah. Now we know Mrs. Valance does not accept a shopping list from Tim. You really are an excellent thinker when it comes to the markets and the things that you're seeing. So if people want to follow you, Tim, best way for them to do it is how?
Okay, so obviously on macrodesiac.com, which you can find obviously up here. Yeah. All right, and again, our thing is just generally trying to bring in the macro side of trading that's not so. We're kind of trying to demystify it and put it into everyday terms so that people understand it. Because it's not really that complicated, So follow us at macrodesiac.com or on Twitter as well.
Okay, and you could follow Tim on Twitter at ValaTim, right?
That's right. Yeah.
Okay, and I want to thank you again. Good luck with your patience, and maybe next time we're talking. We're at an inflection point. I kind of feel like we're at an inflection point when you don't know what to do.
Yes, I think that's exactly where we are.
So rooting for you.
You too, buddy. You too.
And thank you for your giving spirit to come and share what takes you hours of thinking and analysis to crystallize for people that you talk to, Tim.
My pleasure, mate. My pleasure.
Okay, everyone. So don't just count your pips, count your blessings. Learn to be patient. And, I guarantee you that every major Forex or equity broker will not invite Tim to talk about being patient and not trading.
No, absolutely.
What do you think, huh?
No chance. No chance. That'll be trained every minute of the day.
But you know what? He's for you, the trader. So thank you, my trading warrior brother, once again.
Likewise, buddy.
Good luck, buddy.
You
All
too,
right,
man.
see-
Speak
All
soon.
right, and you okay? So I'll get in touch with you on Twitter, and everyone else, so you could join the team in 15 minutes on the Morning Edge. Thank you for your attention. Hope we're adding value to what you're trying to accomplish, and perhaps a trader funding program might be able to help you out too. Adios, everyone. See ya. Thanks, Tim.
Thanks, Dale.